Bank of Canada just cut interest rates again. Seventh straight meeting that it reduced borrowing costs. Mark Carney is about to be sworn in as the new Prime Minister. Our guest is watching these and other topics closely because he wants to see, among other things, how they'll influence the Canadian dollar. Tiago Figueiredo, macro strategist at Desjardins, joins us now. Thanks very much indeed.
Yeah, of course.
Start off with the Canadian dollar. Are you surprised that it's not down more, given the threat to our exports?
Well, I think it's moved around a bit with the headline hockey that we've been hearing, but not entirely surprised. What we've been seeing is that it seems like the theme in the market is that these tariffs are temporary and it's not a permanent thing. When we look out and look at applied volatility across some of these, like across the Canadian dollar, when we look at it at the 1 year range, it hasn't moved all that much, which really suggests that the market still views these as a temporary thing. Mm-hmm. If that changes and we start to see some rhetoric that this becomes a permanent story, we'll see the Canadian dollar probably move a bit more.
Right. I mean, in his first term, he slapped on tariffs. Some of those were rolled back, but of course some stayed, and Biden maintained them.
Yeah. So I think the idea here is these widespread tariffs is kind of the bigger concern. I'm sure that, some of these in different sectors will stay on. There might be some changes as well, but the concern here is really how widespread these tariffs, how long these stay in place and how widespread they are.
When the Bank of Canada cut interest rates, CIBC argued that the trade war was the only reason the bank did that. Mm-hmm. Would you agree?
I don't think it's the only reason. There are other headwinds for the Canadian economy. We have the mortgage renewal cycle that's been well advertised, and we also have the slowdown in population growth that's coming. I would have said that maybe the pace of easing that we're probably seeing from the Bank of Canada going forward is going to be highly conditional on trade policy. If we see an escalation in trade tariffs or even a continuation of what we're seeing right now, it'll probably keep the Bank of Canada cutting rates. But a lot of this is going to depend as well on the read-through to inflation. And that's something that we saw this week when the Bank of Canada released its preliminary results from its surveys. Mm-hmm. We saw inflation expectations start to creep a bit higher, and that was a bit concerning for them as, at the end of the day, they are an inflation-targeting central bank, and inflation expectations matter a lot to them.
I was irate this week. 825 grams of coffee beans at No Frills. $20. Yeah. Hello. I bought some cheaper types. Anyway, David Rosenberg told us this week that tit-for-tat tariffs wasn't the way to go, and we should consider export bans on some of the crucial commodities we send south. I think he mentioned potash.
Okay. Yeah, I think that the tit-for-tat tariffs is, like, at the end of the day, it's going to be inflationary for Canada. Maybe some of these export bans are beneficial. Again, it's one of those things we'd have to look at the actual, run these through the models and kind of get an idea of what the ultimate implications are. And at the end of the day, we're trying to not start this trade war with the U.S. in permanent fashion. We're trying to dissuade any further actions. And I think that's been part of the goal here from the Canadian government, to try to pick certain sectors that will impact the U.S. the most and try to kind of deter them from doing more.
And sure enough, I see the Foreign Minister, Melanie Joly, is quoted today as naturally Canada seeking off-ramps with this dispute, some kind of face-saving thing perhaps for Trump.
Exactly, yeah. I think that's ultimately the end goal here. And it's one of those where they're working to try to get this done as quickly as possible. Right?
Mark Carney, sworn in as PM. What decisive action would you expect from him? I mean, I know for him it's like during wartime right now.
Yeah, exactly. I think from there's a bit of a hope in the market that we'll see a bit of a shift with the new administration in Canada. I think the goal here is really going to be for him to try to get some kind of a deal done with the U.S. on tariffs and probably make some concessions where they can with the least amount of impact for Canada.
Is there much Carney can do in the near term to help boost productivity?
To boost productivity, I don't think so. I think this is going to be a longer-term story. I think one of the things that's been advertised is potential defense spending or more increase on infrastructure spending. I think that's a risk and something that could happen, but it's one of those that will probably happen over the course of multiple years. It's not necessarily a here and now story.
Those projects take years, both defense and infrastructure.
Yeah.
Is there any appetite to roll back regulation in Canada?
Roll back regulation? I think
that's a broad question.
It's there maybe in certain sectors. Again, it's tough. It's tough to really say. A lot of it will depend on maybe in some sectors, but I'm not entirely sure.
Yeah. My limited experience of being, well, I've never been an independent business person, but I know people who are entrepreneurs, and I cannot believe the bureaucracy they have to deal with.
Yeah. Especially like it's one of those things where I think in Canada there's a lot of small businesses, but it's tough for them to grow into larger businesses.
Yeah,
I think that's the challenge there.
Finally, this rotation out of U.S. stocks. Do you think that trend will remain?
A lot of that will be conditional on what we see in Europe. I think that's been a big motivator more recently. The rotations that we saw at the early end of the year was more just, I think, a mechanical function of U.S. outperformance. But now we're actually having a reason to invest in Europe. There's a bit more fiscal coming down the pipe. There's more growth prospects there. I think that needs to ultimately materialize for that rotation to continue. And on the U.S. side, we need to see, these fears of weaker growth also materialize, start to show up in the data, which I think ultimately they will end up coming through.
Sorry, give us that last point again, Tiago.
So on the U.S. data, we also need to see weakness in the U.S. economy for that rotation to continue. If the U.S. economy continues to grow at the pace that it's been growing, that rotational narrative is probably going to fade.
Tiago, thanks very much.
Yeah, no, absolutely.
Tiago Figueiredo, macro strategist at Desjardins. Coming up.